This is AI Command App News. Today, a global sell-off rips through tech stocks as investors start asking the question no one wanted to say out loud: is the AI trade a bubble? Plus, Oracle cuts 21,000 jobs and blames AI, Google's top scientists head for the exits, and Meta hits pause on a program that was quietly logging its own employees' keystrokes. Let's get into it. We start with the markets, because today they're flashing red across the board. Nasdaq and S&P 500 futures plunged overnight as a global chip sell-off spread from Asia to Wall Street. South Korea's Kospi fell a stunning 10%, dragged down by Samsung and SK Hynix. Micron dropped around 9%, and Nvidia and SanDisk both dived in pre-market trading. Here's why it matters. For 2 years, the entire market has been carried by a handful of AI names. When the chip makers sneeze, the whole index catches a cold. And right now, the people who manage the most money are openly nervous. Goldman Sachs told clients this week that investor assumptions about the AI trade are, quote, starting to stretch reality. One Goldman strategist described the AI market as a rubber band, and the only question left is how far it can stretch before it snaps. Strategists are now drawing direct comparisons between today's AI stocks and 1999. That's the dot-com parallel no executive wants to hear. The financial ripple effects are already spreading. Bitcoin is being called vulnerable to further weakness as it tumbles alongside tech. The dollar jumped to a one-year high on bets the Federal Reserve may have to hike rates, and Bank of America is warning that interest rates could explode higher soon. Even SpaceX, fresh off a record-breaking IPO, has seen its stock tank 16%, a roughly $400 billion reversal. When the safe havens and the high flyers move together, it tells you fear, not fundamentals, is driving the tape. Story 2. Oracle. The company confirmed it cut roughly 21,000 jobs over the past year, bringing its headcount down to 141,000. The reason it gave was blunt. The adoption and deployment of AI technologies across its operations have resulted, and may continue to result, in reductions to its workforce. Read that again. This is not AI creating the jobs of the future. This is a Fortune 500 company telling shareholders in writing that AI is why tens of thousands of people no longer work there. And Oracle is not alone. There is now a running list of major 2026 layoffs where employers explicitly cited AI, from software firms to General Motors, which installed robots at a flagship electric vehicle plant after cutting 1,300 workers. For business leaders, the signal is clear. AI is moving out of the innovation budget and into the headcount budget. Story 3, and it's a fascinating one. Google. Alphabet just logged its worst trading day in over a year, and a big reason is talent. Two of Google's top AI scientists defected to rivals OpenAI and Anthropic. At the same time, CNBC reports that Google's online dominance is showing real signs of cracking in the AI era. For decades, the search box was the front door to the internet. If AI assistants become the new front door, the most profitable business model in tech history is suddenly in play, and that matters to every company that depends on Google for traffic, ads, or customers. Story 4 is about data, and it should make every executive uncomfortable. Meta paused an internal AI training program after discovering it had exposed its own employees' keystroke data internally. The program was collecting workers' keystrokes to train AI models, and that sensitive data was left accessible inside the company. This is the hidden cost of the cloud AI gold rush. To feed the models, companies are vacuuming up everything, and that data becomes a liability the moment it leaks. Consider it a preview of the privacy and security headaches heading for any business that pipes its operations into someone else's AI. And finally, the picks and shovels. Nvidia unveiled its Rubin generation data center design that runs hotter in order to slash water use, as public pushback over AI's energy and water footprint grows. Critics were quick to note that it cuts water inside the data center but does nothing about the fossil fuel power plants feeding it. The takeaway for investors: the physical cost of AI, power, water, and real estate is becoming a financial and political story, not just an engineering one. So what does it all add up to? In a single day, the market is pricing in AI bubble risk. Companies are cutting real jobs and naming AI as the cause. The search giant is wobbling, and the data being fed to these systems is already leaking. The era of betting your business on AI infrastructure you don't own and can't control is colliding with reality. That's your AI news for today from AI Command app. We'll see you tomorrow.